Welcome to Nasdaq TradeTalks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, and regulatory landscape and capital markets. I'm your host, Jill Malandrino, and joining me on the desk at the Nasdaq market site, we have Mitchell Caplan, CEO of Willow Wealth, Adam Benowitz, CEO of VOX Funding, and Jean-Louis Lelogeais, co-founder of PEO Partners. We're here to discuss the investment case for exposure to private markets, accessibility, and the challenges investors need to be aware of. It's great to have everyone with us. Welcome to Trade Talks.
And it's good to be here.
Thank you.
Mitchell, 2025, one of the key themes has been investor access to private markets, alternative investments. What do you think is driving that momentum?
You know, it's interesting. I think, as you know, I was CEO of E-Trade for many years and sort of watched firsthand the democratization of financial service products, first with online brokerage and then online investing. And I think it was the same thing, a real desire to have access to products and services that typically had been reserved for few. Yeah. And there's just a real demand for retail to get access to private markets in a really intelligent, educated way.
Yeah, and one of the areas that's certainly growing is private credit, for sure.
Well, what it means for us at VOX and for me is more people getting credit who wouldn't be served by banks. Banks have been an incredible failure, I think, at getting small business people the credit they need with the speed that they need it, because a big bank is just not set up that way. So for me, I think private credit means servicing the merchants better.
Yeah, and from your perspective, Jean-Louis, this private equity, private markets, where do you think this interest is coming from, where investors are thinking about it as part of their core portfolio?
Yeah, I think bouncing off what Mitch said, the case is very clear. Individual investors are mostly in 60-40 mix, 60% equities, 40% fixed income. If you diversify in a third asset class, let's call it private equity, like the institutional investors have done, and you go from 60-40 to 50-30-20, where 20 is private equity, private markets. Actually, even if you just invest in average funds, you'll get probably about something like 1% a year better performance to your entire portfolio with a little bit less risk. That's super compelling. 1% a year over a lifetime doubled your money. So that's the case.
Yeah. Mitchell, I wonder if it's because investors have gotten used to more self-directed types of access, and now they're demanding that democratization to private markets. You hear about it so much that there's private companies that aren't going public, they're staying private longer. Exactly. How do I get on the ground floor of something like a SpaceX? Exactly,
and so even private credit or private equity, when you think about the whole broad category of private markets, I think consumers are realizing, and particularly sophisticated consumers are realizing, that a truly diversified portfolio includes both public and private. And part of that is exactly what you said. More and more companies are staying private indefinitely or certainly for much longer periods of time. Mm-hmm. So if you want access to opportunity, this is an interesting way to do it through the private markets arena.
Yeah, I would say a lot of this is, of course, technology-enabled efficiency in being able to provide that to investors.
For sure. And like I say, democratizing the access to the capital. Right. Like one of the things we're working with at VOX is embedded funding. So even just going through credit card processors to get a restaurant or a roofer the money they need is where private credit comes from, to me, in micro private credit.
Mm-hmm. Well, when you think about two different classes of investors, institutional versus retail, there are unique challenges for each one of them, and particularly the retail investor, where it might not be as well understood additional risks that can come from investing in private markets. Yeah,
I think already the first piece of it is the time horizon, right? It's and for individual investors, you have to segment between their own money on balance sheet versus their pension funds. The big institutional investors have long time horizon when they manage their asset liability. So the issue of liquidity is a real topic, right, for individual investors, and how much of their portfolio can they put.
And this is part of the strategy behind the Willow Wealth brand as well. Part of that is the right kind of access to private markets. In full transparency, there are some significant losses, behind the rebrand.
So ultimately, I think the right way to think about this is that our job is first and foremost to educate. Right? So ultimately, the first question that needs to be answered is why private markets? And why does private markets make sense? And then the second question is, why Willow Wealth? Why do we and why does our digital platform fit your needs in terms of how we serve you with a broad array of products? And ultimately, as a result of that, I think that, to your point about the rebrand, I had wanted to do it a while ago, a year ago or more, because ultimately, when Yield Street was founded, it was 10 years ago, it was still that period of Wall Street meets Main Street, right? And yield. And the world has changed and evolved, and I think our offerings have grown so significantly that it's really now about sort of diversification and curation.
Yeah, and I also think it comes down to disclosures and risk warnings and making sure that it's
100%.
fully understood. You know, when I started in the business in 97, 98, I remember we used to do pitch decks for institutional high net worth clients, and the books were like this for each one, right? That doesn't exist anymore.
I mean, look, everything is about speed and access,
Right.
is what I would say. And digital platforms in all way, getting the money, but getting investors the information they need and getting the clients the information they need, you know. When we founded VOX, we really wanted to fill the hole left by banks, you know. When a roofer needs $100 grand in an hour, try getting a bank to do that.
Yeah. Well, I mean, you know, we did go through the financial crisis, and certainly some of the regulations changed, which had tighter restrictions around the banks. So there certainly was a need to fill that gap.
Certainly.
Right.
Certainly. But I mean, they stopped serving some of the clients that they needed to serve. As I said, we concentrate on small business, and when they need money, they need money.
Yeah. Do you think this is going to be a topic that continues to derive demand from investors? Or let me ask it in a different way. Is it less about the return and more about being educated and the security of it and understanding the product?
Yeah, I think education is going to be key. I think one of the issues, you know, with this whole democratization of private markets is three topics. One is access, which I think you've been. The second is affordability, because I think, unfortunately, a lot of the offerings to retail investors to access private markets are going to be fees on fees on fees. So accessibility to the good funds, right? Because if you get a mediocre fund, access to a mediocre fund after fees, it's not going to be a good solution for investors, right?
Yeah.
And the third, which is what we focus on at PEO Partners, is providing liquidity, because most of the offerings out there, including evergreen funds, are not that liquid.
Yeah.
And the topic of how much, you know, so we provide proxy exposure in a liquid format to private markets. So that's going to be an important topic, liquidity.
I think part of the challenge too is when an investor hears fund, they think of a wrapper where the liquidity exists, as like an ETF as an example.
Exactly.
Fund doesn't always mean the same thing in the private market space.
That's right. And again, it goes back to the importance of basically education. And I think one of the things we learned was, to your point, I agree with you, I remember the days when the books were that thick, right? And nobody got through them. And so ultimately, I think we started to work on ways in which we could get that information out to the consumer in a digestible way. So whether it was video content, whatever it was, to really educate them about private markets broadly, and maybe that specific investment or asset class, right, in terms of how it fit into their portfolio and building a truly diversified portfolio.
Yeah, I also think sometimes alternative investments and private markets kind of get lumped all in one, and there really are a number of different verticals under that umbrella.
Very much so.
Yeah.
Yes, and and it's getting them the information that they need in a good way to understand and judge what they're getting.
Yeah, so when we talk about private markets, alternative investments, and so forth, and of all those verticals underneath that umbrella, where do you think investors should be considering allocating money towards? Because some are more complex than others.
Yeah, I mean, it all depends on how much wealth they have, their risk return and liquidity profile, you know, because under alternatives, you can go all the way to hedge funds who are fully liquid, and you can get strategies that are market neutral. At the other end of the spectrum, if you invest in a private equity fund, let's say that's offered by iCapital, you're going to be locked in for 10 years, right? You know, and but potentially, obviously, you're driving to a much higher multiple on your money and so on and so forth. So I think it's really the role of the advisors to try to help, you know, portfolio construction and canvassing kind of the strategies that make sense.
Well, which is so interesting, because when you think about the role of the advisors, Gen Z approaches advisors very different than they do
Very much.
perhaps, you know, our generation, baby boomers and so forth, where they want to be more intimately involved, and an advisor is somewhat of, and I wouldn't say unwelcome concept, but when you think about the multiple trillions of dollars with this wealth transfer that's going to take place, I wonder if there needs to be a better balance of, it's not, you know, a zero-sum game where it's only a digital experience versus only an advisor.
So I'll give you an interesting stat. Over 60% of our customers also use an advisor. So, I mean, and one of the things I think we learned at E-Trade was it was really important to meet the customer with what they needed in terms of the interaction. So, you know, it was the idea of if you want to come and do it yourself, you have the technology, the ability to do that, the offerings. If you want guided advice, you are able to use technology to get guided advice. And we even offer a product, Willow 360, which is effectively a robo-advisor for private markets, where if you want to come and have it done for you, Wilshire oversees it, and the three underlying funds are Goldman, Stepstone, and Carlyle. So if you're meeting the customer where they are and what they need, to your point, right, around Gen Z is going to be very different in their behavior than baby boomers, which is again very different from the prior generation. So I think ultimately for us, it was really trying to understand what did it mean to build a digital platform which could really reach out and speak to the end consumer in terms of choice, the things you were talking about, choice, access, cost.
How do you see the private credit space evolving?
I think it's getting more and more digitized every day. I think that credit has always been a thing where there's a lot of middlemen and a lot of things, and that is being taken out every day, getting faster and faster, meeting the needs of the people who need the credit, and then being able to get that information to the investors also who need it. I mean, what we try to do at VOX is care and listen to the merchants that we're funding, and then everything kind of takes care of itself. Be fast and care about what they care about. Get inside the mind of the entrepreneur.
Yeah, which is interesting because at the end of the day, if consumer investor demand is there, the industry will figure out ways to provide that product.
Well, to be honest, actually, a driving force is of the democratization is also coming from the private equity firms, because there's no more growth in their institutional market segments are saturated, right? The pension funds already put 20% of their allocation. There's not much growth. So if you look at all those private equity firms that are publicly listed, the reason they get high valuation is because they're going to grab a fair share of the trillions of dollars of baby boomers by accessing private markets. So a great part, it's supply and demand.
Yeah.
But the supply side is a big part of the equation. All those firms are focused on accessing.
Yeah, I mean, you report on it all the time. At the end of the day, we're at this really interesting moment in time where there's the convergence of the manufacturers of the product really interested in retail feeling like they want to understand and access the product, and all the technology pipes in the middle. And it's, you know, it's very hard today, as you know, to pick up a journal, a periodical, listen to a newscast, that there isn't, private markets isn't a topic.
Yeah.
Right?
Yeah, it's so interesting. We're at a moment in time where all of this is converging. Like the technology
100%.
is finally here. Investors certainly have more education than 25, 30 years ago, as an example. Even better tools than the institutional desks had, right? And the innovation behind the products it's every time you think that have we peaked? No. There's always more product that can be developed and designed. It feels like this convergence it's an interesting moment in time. I
agree completely, and honestly, it feels so reminiscent to me of what we saw when we were building the bank for online banking, and then E-Trade for online, first trading and then online investing, right? You see a lot of the same pattern recognition. And I agree, I think it's this really interesting moment in time where the convergence is occurring.
And it's cool because what these guys do allows everyday people to reach like what I do. Whereas before it was very segmented.
Right. So how so? Just because there's more product choice.
Well, it's also
access.
It's also I can have a product offering that allows people to come into the space that I'm funding. Right. People wanting to get into small business funding. How is anyone going to do that except for a big hedge fund? But what these guys can do is sort of bring a product like mine to everybody.
Yeah. Yeah, so it only seems like the momentum is just going to continue to pick up. But again, I think the transparency, the education, the
100%.
The risk mitigation
100% agree.
is going to be key.
And as I said, I think I would not, I keep emphasizing liquidity, right? If you can, and that's where we, again, at PEO Partners, we developed the innovative proxy technology. So we provide proxy private equity exposure, but through the public markets. By harvesting the data from private equity firms of what they do and try to replicate in the public markets what they do, and that gives you an average and a profile of performance that's in the average of average PE net of fees.
Yeah, it'll be interesting to see if 20, 25 years from now that we're talking about this type of access as we think about E-Trade and online banking, where it's ubiquitous and it's utility almost.
Exactly.
Yeah.
Exactly. And I suspect I mean, honestly, when I was running E-Trade, I thought about private markets, right? And my view at the time was it was just too soon, right? First of all, we had the wrong customer base because we were serving principally people who would be thought of as sort of mass affluent. Right now, for Willow Wealth, we tend to focus much more on people who are qualified purchasers, accredited investors, are more sophisticated in terms of really understanding, and they're interested in engaging in the education and want to absorb the education to learn.
All right, I appreciate everyone's insight. Thanks for joining us on Trade Talks, and thanks for joining me from MarketSite. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.